Good morning, traders. Good morning to you. A warm welcome. It's 9:31 at the moment. Before we get started with our session this morning, remember, guys, as a disclaimer here, the video is opinion and should not be construed as advice in any way. A warm welcome to everyone, man. It's really, really good to be with you. If you're here for the very first time, the name's Ashley Reeve. I got Tandy in here with me this morning, as always. Good morning, T. Guys, happy Friday, traders. T's absolutely right here. It's the final trading day of the week. So, guys, let's, like the stream. Make sure that we get this out to as many people as possible. You know, the quality of content that we do provide at TD Markets is phenomenal. All right. And then, obviously, if you'd like to sign up, like to start your journey, don't forget it. Tandy's put all of the beautiful links in the chat facility there for you to do that. All right, I see Tanya's online. Twistar, I see you. Brett, I see you. Tato, I see you. And Sammy, good morning. It's Friday the 24th, guys. We steamrolled through July. It's absolutely fantastic that we're making progress. At the same time, there's got to be balanced progress with a lot of skill that gets developed. It doesn't help we go through the weeks, but there's no skill development. All right, so let's make sure we lock in and get some of the content that's going to help us here. But remember, we have a narrative to start off with this morning, guys, and that is in the form of the fundamentals. This is going to guide us for the rest of the day, as to what has happened over the past few hours. It's going to guide our decision-making process, whether that be entry levels, whether that be drawing a specific zone, placing a stop loss. Fundamentals helps us to create the narrative for the setup. So let's perhaps start off with the US, and then I'll obviously go to the charts, as you guys know. Maybe a quick recap. Yesterday, the dollar gave gold a beating. All right, gold got a beating yesterday. We had good numbers come out of the US. Less unemployment, all right, was filed, showing resilience in that US economy. Feeling good at this point in time about the US, isn't it so? However, one must look at what's happening today. Let's maybe just connect and thread that through now. We're seeing that fewer Americans obviously applied for unemployment benefits. Jobless claims dropped to 187,000, lowest level in 60 years, guys. And this shows, obviously, like I said, US job market is strong, it's resilient, and the strong job market means people keep spending, which can keep inflation higher. So what's the trader impact, or what's the impact for us? All right, it supports the US dollar because it increases the chance the Fed keeps those interest rates higher or even hikes the rates again. So that's important for us to note here. We've been dealing with the higher inflation, we've been dealing with the higher oil price, and we've been dealing with the fact that the percentage is being increased from 40 to 50 to 60 and even 70% now, that the Fed is going to hike those rates in the month of September. And let's be honest and frank here, guys, that is about a month away now. All right, the month of August, July is done. It's about a month away, and we're seeing that rate hike coming. That automatically, by the book, default strengthens the US dollar. So we would like the gold then to finish off whatever it needs to finish off from a technical standpoint before that cut comes. Because when that cut comes, we would like to be in the flow of a stronger dollar. Please peep the game on that one here this morning. All right. We also cannot, omit the Eurozone. We know that the ECB, they have obviously paused those specific rates. They left them unchanged. It was expected, but we obviously saw a little bit of an impact in the euro there as well. They are waiting to see how the inflation develops before making another move. However, guys, let's be honest here. I told you guys already that they cannot raise all the rates at the same time. All right, so don't always be fooled by all the stories. You can't raise the rates at the same time for all currencies. They got to take their chances, all right? Chances, and that's about it. The world moves on levels, all right, in different moments, different periods, and that's just how it works. You can't get everything up and you can't get everything down at the same time, all right? So the inflation, obviously, it's been cooling, but those rising oil prices could push the inflation higher again. So it's basically the same narrative. It all boils down to the fact that they cannot raise the rates exactly the same time. The US dollar is the leader. They are the global reserve currency. You know, many times they will set a standard and the other currencies follow. All right. So we do, however, know that markets still expect 2 ECB rate cuts, before the end of the year, with the first likely in September. So do you see where differences come in? They're all revolving around interest rates, the hiking or the cutting, but it all revolves around interest rates right now. That's the theme, all right? And that's caused by the higher inflation, all right? So the euro weakened, we know now, against the dollar, because obviously traders still expect the cuts. But again, there was better information or reports coming out of the US. Let's not forget the bond yields there in the US. It's still climbing. The US 10-year Treasury yield rose to 4.71%, guys. It's the highest since January 2025. And these higher yields are showing investors, obviously, to expect the interest rates to stay higher. More value coming into the dollar. So higher bond yields, to conclude on that one there, usually strengthen the dollar, and they pressure the stocks and the gold. Talk about gold and stocks. Let's start with the stocks. Futures, that's US 30, S&P 500, NAS 100, all right? What's happening over there? They did fall for a second day, guys, all right? Google dropped after announcing huge AI spending. Tesla fell after weaker profits. And we're seeing a lot of the investors are becoming concerned that AI companies are spending too much. So the risk sentiment weakened, especially in the technology sector. That's going to be important. And then on the gold front, it's obviously pulling back. Let's get to the gold, and we'll go through the technicals now as well. Remember, we're just starting off the morning, all right? The gold obviously fell, below the 4,100. The rising bond yields for that, the stronger dollar reduced the demand, and the geopolitical tension as well, usually does support the gold, but the expectations of the higher U.S. interest rates are currently having the bigger impact. So even although we should be seeing a higher gold price, it's the interest rates that's keeping the gold at this specific level over here. All right. So gold is still under pressure unless safe haven demand starts outweighing, and that's what we want to see, guys. Right now, gold is a safe haven because of geopolitical tension, but it's under pressure because of interest rates. All right. So it's important for us to know these things, guys. I mean, the Fed is a little bit more hawkish there. All right. 78% of that rate hike is there. All right. Now, if there's any questions around that, you can obviously put that in the chat facility. I'm ready to get onto the charts. We just put perspective into place. That's the narrative we're looking for. But I'm ready to get on those charts right now. So let's go. Let's go. Let's start it off with the oil price, guys. Remember yesterday I said to you that there could be a lower oil price coming based on the divergence. I have not gotten into any oil positions. I'm waiting for $91 a barrel. That's 91.465. That's what I'm waiting for before I get into the market, guys. All right. At this point in time, I still see the higher inflation. Why? The Middle East tension is still there. So if we do get a break beneath 91.46, that's a good place for me. We were absolutely spot on with this entire movement, and we are now only dealing with a correction, and that is it. All right. Now, technically, what we're seeing from a correlation perspective, if the oil price comes down and it continues to come down, that will be possibly good for the gold. The gold price, we had this specific area in place. Remember, I spoke to you about an impulse foot and an impulse head and how the pullback goes into that impulse. This impulse that has come from there to there has different levels when the pullback happens. There is the sorry guys, I'm trying to remember the names here. It's the surface level, then it's shallow, then it is sharp, and then it's deep. All right. Those are the 4 levels in which the pullback operates. This is absolutely, without a doubt, a very deep pullback over here. All right. I have not gotten out of gold for the mere fact that we still have some way to go. All right. But we've been slowed down. We had initially thought that this was it. Price, after creating the new high within this impulse, and I'm going to say that again, an impulse has highs and higher highs. This one is 3. 1, 2, 3. So there were 3 higher highs within the one impulse. Please peep the game on that one. I hope you guys are peeping the game, all right? And what's important is that you can see sometimes the pullback mimics the same thing. Let me just pause there for about 15 seconds. Is everybody here, guys? Let's just make sure the guys are actually tracking here this morning. I know it's Friday. Some guys go and leave very early before the weekend even starts. I hope that's not you guys. I hope you guys are here. I hope you guys are listening. I think you should show the stream a little bit of love there. Don't forget to like it. Don't forget to like it. Don't forget to like it. All right. All right. All right. So check this out, guys. You're peeping. All right. There we go. All right. So there's 3 highs within the one impulse. What happens many times, the pullback can have the same amount. It may not extend exactly the same, but it can have. Look. Impulse 1, 2, pullback 1, 2. All right, please peep it, peep it, peep it, peep it. This impulse here 1, 2, 3. All right, then it starts here 1, 2, 3. I bet you didn't see it like that before. All right, now it does not need to have the same extension, because here we're dealing with an uptrend. So you have to determine what trend you are in for it to make more sense. So even although there were 3 this side, there's 3 this side. Actually, there's 4 here. 1, 2, 3, 4. All right. So it will be 1 off or so at times. It will not be exactly the same as long as it does not surpass. If you get 1 more and it's outside of the impulse, you clearly understand that we are moving away from this move here. So if I go to the shorter time frame here, All right. If I go to the shorter time frame, let's say I go to the 10-minute. All right. Hold on. So you see here in the 10-minute, it has 1, it has 2. All right. Highs within the 1 impulse. That's important. So the pullback can have something similar. The pullback can have something similar. All right. So gold is still at this point in time bullish on the hourlies, not the weeklies, guys. All right. I'm not dealing with this. I'm dealing with the hourlies. The hourlies is the micro movement here. So we're seeing it lift. It's lifting. Look how it's lifting. If I take a horizontal, you can see that slant. It's slightly slanted to the upside. Even although price is coming down, there is a slant here that's telling us there is pressure of buyers coming in. Now, we're not trying to buy it all the way up here. We are only buying it from this area to that area, and that buy has been interrupted by that impulse, by that pullback. That's it. So we're anticipating gold to continue the ascension, create a new impulse to the upside. That impulse might work like this: come up, then pull back, then impulse again. It can. Absolutely. All right. What gold did do, it stopped in our area that we're watching. There's the gray circle. It stopped in there. For as long as it stays in there, our trade is safe. All right. The trade is safe for as long as it stays in here. If it pulls out of this area here, different story. That's the same with when you look at the gold to the euro. Same thing. Also still from an impulse perspective. Look, 1, 2, 3, 4. 1, 2, 3, 4. It may not extend all the way down, but the price will create it. So if you keep seeing the 4 there, you know this is a pullback. If price goes 1, 2, now you know you're not dealing with a normal pullback here. All right, you're not dealing with a normal pullback here, guys. You know how many times over the years I've had the question, Ash, how do you know we are in a pullback? I'm revealing things to you now. I hope everybody's clear there. Intel, I see you there. Savage, I see you there. Mutusi, Nontle, I see you there this morning. All right. Now, over the years, how do you know? How do you, guys, these are the things. This is the technical skill that you got to get so that you can create mentally. All right. You're creating a narrative for yourself, a narrative of risk. All right. Are we together? I hope everybody's clear there. All right. It's very important. You got to create the risk averse narrative to say that this is going to help you. So if price has to come down, remember I said 1, 2, and you can see it through the zigzag because the price touches the zag every time. That's why I use the zag. It's helping you count. Okay. So if this one was here, let's say this one was like that, 1. And then you get this. And then you get 2. Then you know you're not dealing with a pullback. This is possibly a reversal. Are we together? I hope everybody's tracking there, guys. I hope everybody's tracking here. All right. Same with silver, guys. It's nothing different here. All right. Silver, there's the impulse. 1, 2, 3, 4. Do you see that? 1, 2, 3. So if a fourth one comes, it's like, hey, it's okay. I know it's still within the impulse. I just see the pullback. But if silver did this from there, we came down like that. Oh, now we know we got to watch out now, because what happens is, look at the space. Reversal there now. As you see that? Are we together? Now, what price can do is, this is the truth. What price can do is it can do this. It can come down. 1. Are we together? Then it goes Then it breaks up like that. Look at this. Yes. Do you see that? And then it can do that. Yes. Because these lows are not beneath that one there. Does that make sense, guys? These lows are not below there. So it can do this, absolutely. But it can also do this, up. And look where I'm at. Look, right there. And then this. Where's the second one? It can do that. Then it's 1, 2. So this is a lower high now because it never surpassed. That's why you got to watch. It never surpassed the head of the impulse. It never surpassed the head of the impulse. That's a very important thing. It never surpassed the head of the impulse, and it works, and it went towards the foot. So the second one is already at the foot. Do you see that? 1, 2, 3, 4. The second one is already at the foot. That's telling you it's language. This is language, guys. You got to speak the language of market structure. So I'm leaving silver, nothing to do there. Let's go to NAS 100 now. We had a crazy time with NAS. Look at NAS, guys. Look at NAS here. Found support at the foot of this impulse here. Well, it is close to the foot. Just missed us. Look at that. Yeah, so it went to the zones, anticipated, still gunning for the 29,154, taking its own time to do that. So we started off, we said we're going to go to a much lower time frame. All right. I think it was a 5-minute and a 15-minute. Let me just double check here. No, it was a 10-minute. Sorry, guys. I think it was a 10-minute. So look at this. 1, 2. So from there, are we together? 1, 2. Do you see that? Are we together? And then can you see how the pullback stayed within this impulse here? The pullback stayed within the impulse. So this is 1. Ash, why is this 1? That's 1. Are we together? This is 1 because they're on the same level. 1. Do you see that? 2. Do you see that? 3. And then boom. But it stayed within the head. So there's 1, there's 2, there's 3. You can use a line chart as well, guys. You can use a line chart as well to help you, okay? 1, 2, 3, and then we push up. So now what we have done here, we have 1, we have 2. We have 1, we have 2. So if you have a pullback that goes 1 and then 2 down there, you know that, listen, NASDAQ, forget about it. Forget about it. Forget about it. Forget about it. So right now, we're still on track. We're still on track here. We're still on track. Let's quickly see if we can see something here that's going to make sense to you guys. Here's a good example. See this impulse here? You see here, 1, 2. Do you guys see that? Are we together? Impulse, 1, 2. Then look here. 1. Do you see this? It already came here. Do you guys see this? It already came to 1, and then it goes up, does not break the head. It comes down, 2. Do you guys see how we're pushing down here now? That's where 2 started. Are we together here? Forget about it. Forget about it. That's why this area, when I said if price breaks below that area, I'm out. That's why I got out. And price did go a little bit further down. Look at that. Found a bit of support now. Very important. Very important, all right? So NASDAQ right now, leaving it as is. We had the AUS 200 here. All right. We had the AUS 200 over here. We had it initially thought we're going to push up completely. Correction. And it works vice versa, guys. All right. It works vice versa. So here we have 1, we have 2, we have 3. Look. 1, this impulse, 1, 2, 3. Now look here. As we go up, 1. And look at this. 2. And then we have a pullback already to 1 there. Look at that already. You see that? Hold on. I think we did that. Was it the 10-minute or the 5-minute? Do you see how we just move sideways here? There was no movement like that. There was no proper movement. I got in here. I had a stop loss below here. That was that risky one that I spoke to you about. And price took that area. And look, it's coming back now. You see why it's so risky to trade minute charts? It's exactly for that specific zone. So I'll start over here, but we'll do that at midday. Right now, we're just taking an account of what is happening. All right. So here we have now. We've done some of those now. The UK 100. Oh, we went very close to it. Look. This was yesterday. Look how close we went to it. See that? Went all the way. Look how close we went. Right there. Right there. Very close. But we were spot on with this as well. All right. Euro USD, guys. Euro USD. All right. So do you guys see here? We have 1, 2, 3. It's too much. Sorry about this, guys. Do you guys see this? So here we have 5 of them. All right. Remember, you got to sometimes, guys, if there's too many, excuse me, like on the 5-minute, let's say there's too many of them. You can always go up on the higher time frames to get the definitive areas or the defined areas. That's why I went up to the 10, I went up to the 12, I went up to the 15, because I want to get the exact places. I want to cut out the noise. So here is the other side of it now. So we have 1 there. Can you guys see that? I can't take this one here. I have 2 there. I can't take this one here because it's not a high. That's the high. That's the higher high. So there's 1, there's 2. And look, 2 has already pushed above these 3 here. Do you see how I'm scaling here, guys? Do you see how I'm actually scaling the impulses? So there's 1, there's 2. This is when you're looking at it in a little bit more detail. All right, guys? So there's 1 there, there's 2 there, and then the impulse comes. That's good. That's good if you are taking a buy, because 2 has already caught up with 3. That's like having an engulfing candle over the last 2 candles. All right. And then we have a new impulse that thrashes it. Look at that. Look at that. So the new impulse is 1, it's 2. So what we want to see here now, the pullback, what you don't want is 1. Because if you get 1 there, then you know there's a higher probability we're first coming back here again. But if it does this, 1, right, there's 2 there. And we have 2, and then we push up. You do not want 1. You want it to contract like a spring. Guys, this is very important stuff here. Please hear what I'm saying to you. So count the number of times it pushes up. 1, 2. Is there an opposite? Sometimes there can be 3 here. That just means if there's 3 instead of 2, what that simply means is there is a more aggressive move coming. If it does that, there's a more aggressive move, boom, to the upside that's coming. Do you see that? Man, I hope you guys hear me today. Hear me today. Sorry about that, guys. Hear me today. If you just focus on these, and this is the stuff that you need to help you work out your strategy. Because sometimes a strategy is simply, I see 1, I see 2, I wait for the second push and I put my entry there. It's part of your strategy. It's part of a strategy. That's such an important point there, all right? Look at GBP USD, guys. Look at all of this here. How many highs there? Count them. If I go to, this is a very strong, see how aggressive this is? There's only 1 here, and then it totally obliterates it. See? Look at that impulse there. So always expect, that's why the Fibonacci is so good, guys, because the Fib helps you expand your understanding on where the impulses, the pullback can possibly stop. So 1, 2, 3. You see that? That helps you engage. That helps you engage. So use the Fib to engage the market structure. Don't just look at a Fib level and be like, oh no, I think that, because price normally comes down to the 61 point or the 50 point, I'm going to take my, no, you see, you're not wrong about that, but go deeper than that. You're engaging the market structure. You're not engaging the Fib. I'll say that again. I say that again, guys. Don't engage the Fib. Engage the structure with the Fib. Can you please quote that? Don't engage the Fib. Engage the structure with the Fib. It's a tool. Oh, what a Friday. I think we're done, guys. Do you guys think we are done for the morning? Let me know. Quickly, tell me in the chat. I think we're done. We think we can wait for midday. Am I right? We can wait for midday now. For 12. Am I right? Quickly in the chat. Quickly in the chat there, guys. Quickly. Are we done? Are we done for the morning? Are we done for the morning, guys? What do you guys think? All right, that's AUD USD. Tavo says no. Brett says silence is so is it a no? Are we done? Yes or no? Come on, be decisive now, guys. You have to be decisive. We're a community here. Are we done? Are we done? Are we done? Are we done? It's 10:03. Are we done? Quickly put it in there. Check Tabo. Tabo, I love the decisiveness, but BTC USD, I'll check out now. All right, guys. Mutusi says we are done for the day, guys. Mutusi says yes. Oh, Mutusi says yes. We're done for the day. We can move on. Now, that's AUD USD. And guys, please make a note of this. Engaging with the structure on the even numbers is good. When I say even, let me not use the even. Let me use real time example. Okay, so we imagine life, or we live life in certain ways. All right. Example, we live day by day. So checking out impulses, all right, on a daily basis is good. Are we together? Then we have the clock system, all right? We go from 12 to 3, 3 to 6, 6, 9, 9, 12. All right. So that specific way there, that's every 3, 4 hours. So a 3 or 4 hour chart is good. You can use that. Then we have meetings example, all right, that can take an hour long. It's normally structured. An hour chart is great. So use the time frames that's realistic at this point in time. All right, that does not take away from your actual schedule in life. Are we together? You want to create convenience for yourself. All right, I see there. All right, so Intel is saying that Mutusi's outvoted. Oh, it's Tubbs. Oh, okay, it was first time. All right, guys. Let's give Tubbs a round here. Let's welcome. Let's welcome Tubbs here, guys. Intel. Let's welcome Tubbs here. Tubbs. Hey, man, it's good to have you on. Welcome. You're at the right place. All right, T-Boss, you are at the right place. All right. So use the 3, 4 hour. Use the daily. You can even use the weekly or the monthly because we live in weeks. We live in months, and so forth. So if you can take that and you make it part of your schedule, then it makes more sense. Look at the AUD USD here now. There's an hour frame. Now I'm using this impulse here. All right. I'm using this impulse over here. This last one here. Let me just take this black off here because that's a bit. So this is the impulse I'm using. All right. So let's put a rectangle around it. And let's quickly look at it, let's say 15 minutes. Look there. So here we have how many? Let's see. Nope. Look how I'm shifting gears. So 1. You guys see that? 2, 3, 4. Look at that. You guys see this? So this impulse here has about 5 of them. Now this is a very strong move to the upside because in this one, you're already seeing we've moved above the 3 here already. The first high is already there. Strong move. Then a pullback already. This impulse did not stop here. Like it literally, boom, first high right there. Why is it the first high? Because that was the previous area. We racked it right there. So if I go to a 15-minute, now I start to see the impulse. Do you see that? So there's 1. Look where the 1 is. It's already above. Look at all the work there. Do you see that? So there's 2. There's 1, there's 2 here. So now pullback. What we don't want in the pullback now. What we don't want is this. Hold on. Sorry about that. What we don't want is this. Boom. There's 1. We don't want this. 2. If you get that, stay out of it. Wait for it. That's why I got out of NAS. That's why I got out of NASDAQ. I didn't get out of NASDAQ because I don't see the opportunity. I got out of it because I mitigated risk. When it broke that area, look, it took 2 of them to be right here. But if it does this, 1, look, 2, look, I couldn't care less. I don't care if it looks like this. 3, I couldn't care less, guys. Don't be moved by this. Some guys will say, Ash, you can see this thing is going down. Yeah, wait, because this can happen. Do not be fooled. See, this is a falling wedge. This is a falling wedge right there. This is a falling wedge. And what happens at a falling wedge? We push to the upside. Okay? We push to the upside. So don't be fooled by that. 1, 2, 3. Ash, it's going down. Be very careful. There's 3 here that's not going towards the foot of the impulse. Plus the divergence. Nuh-uh. Come on. Look at the NZD here, USD. We're trading this area over here. We had 1, 2, 3. Can you see that? 4. Then we have 1. And look what happens. Boom! Do you see that? 1, 2, 3. Then we have 1, 2. And it's not even close to this area here. So why would I worry one bit at this point? Yes, I can take my profits, guys. If you can just get this, because that's, that is how we're dealing with the market structure here. It's moving in increments. Let's go to GBP yen, guys. Look at this. If I go to, do you see why I'm not even worried about this? 1, 2, do you see that? 3. We've not even created a high here yet. Look. Do you see that? There's actually 2 here. I'm looking at it now. Yeah, there's 2 here. But we've not even created 1 yet. It's failing. Look, there's no 1 here yet. Only if we push above. Remember, only if we push above. You guys with me? We're not even close to the head. We're still at the foot. So guys, peep the game. Peep the game. All right? This is market structure. That's why I say watch out for the highs. I'm saying watch out for the highs because we could get the opposite move of this impulse. So watch for the highs. So if you have a sell here, watch it. Don't wait for this to go all the way up past the head here. If it goes past the head, it's over. Guys, if you take out the head of an animal, decapitate, it's done. It's done. BTC. Okay, let me quickly go to BTC. Let me go to BTC quickly. Okay, apologies, guys. Look at this. Sorry. Look at this and look at this. See, it's all this. There was a lot of lows here, and then a lot of highs here. It's language, guys. If I try to speak Spanish with you, but you speak French, it's a problem. Okay. All right. Let's go to BTC quickly here. No, sorry. Before I go to BTC, look at this. You see this? Same language. Guys, there's no difference here. There's no difference here, all right? Hang Sang, look. Language. 1, 2, 1. You see that? 1, 2. Here we have 1. It dropped all the way there. Oh, my. Yeah, except the chickens. No, it's true. Yeah, chickens is a very interesting one. Even to trap them is quick buggers those. All right. BTC. Let's go to BTC quickly. Which time frame you want me to check out there, guys? Sammy, what time frame are you looking at there? Quickly tell a brother here so that I can go there. Hey, man, but we're doing well on BTC, man. For all of y'all that's not in BTC, I'm just saying. All sorry, guys. I'm just getting my center here. Let's give it time. All right, so look. All right, hold on, guys. Yeah, we are already, guys. I'm already up here. Like I'm already in, and it's actually really cool. The Bitcoin is really cool. All right, so all right, so do you guys see how if I go to a higher time frame now? Watch. All right. So here we have Bitcoin. This impulse here. We have basically one proper low and then a lower low here. All right. So what we're dealing with is that lower low has a support here now. All right. It has a support. This is a support area. So what price has done is it had a few lows. It had one here basically. All right. And then it had a pullback. So what it's trying to do is we're trying to come back now. So we're dealing with this area here. Just so you do know. All right. So let me put a right there. This is what we're dealing with. So when I go and I flip down now you know what we're actually dealing with here. All right. Can you guys see that? Can you guys see that? So you can deal with it on a 4-hour. You can deal with it on a 6. On Bitcoin, or at least crypto, dealing on a 5-minute is not productive. You can, but it's not productive. All right. What you're looking for is proper levels or proper areas. Like this is a proper zone. That's a proper zone. That's a proper zone. Do you guys see that? Then it tries to go up. 1. But look, then this impulse now has 1, 2. So what have we done now? Now we've gone up. 1. Do you guys see that? Sorry about that. Sorry, guys. So we've created 1, we've created 2. So they equal right now. Do you guys see that? Are you guys with me here, guys? 1, 2. Do you see that? So here's 1, there's 2. So what we need now, if we can break there, beautiful. Do you see that? We can break. So you'll always hear guys that are pretty well versed and so forth. They'll say to you, be careful of using shorter time frames. There's a lot of noise. That's actually true. So the higher time frames, there's less noise. You can see the highs better. On lower time frames, there's too many of them. So before you even scalp, go and look at where are you in the equation. All right. So AUD, let's maybe go to AUD and then we'll pause here for the morning. Okay. So go to a higher time frame first. Let's say you're using a 4-hour here. All right. And let's say, okay, you say, right, there's a new trend that's developing here now as an example. And let's say you want to take it up till that zone there. Now you know, all right, there's a new one that's formed here. There's a new impulse to the upside. So automatically, you know you're dealing now with this area here. So there's 1, there's 2. All right. Now, if an impulse starts on this one here, you know you're dealing with 1, you're dealing with 2. If price does this 1, pullback, 2, you're still okay because now 2 is in between this entire area. Then let's say you have the third one here, you're still fine because look at the gap between there and there. Don't forget, the high and the low is very important, all right? The high and the low is very important. The head and the foot is important. Look where that is. So you're still okay here for long. But if you did this, that, this, that, Do you see how different that is? Majority of this move is sitting below that area. The weight has pulled towards 1, 2, 3 is sitting below that area. Guys, this stuff is market structure, guys. This is when we, I'm not going to go into more detail. That's like those are the types of stuff we're going to be sharing in our topic discussions in the next couple of days. So stay tuned for that. It's coming. You're going to have to do a competency assignment for us, and you'll come into our Zoom classes where we detail things like this. So this is like, I said this morning, let me give the guys a bit of a teaser here in terms of, and I'm going to be transparent, guys, a bit of a teaser as to what you can look forward to when you come into the classes, or at least those refining and mentorship classes. It's absolutely free. You're not going to be paying for it, but you're going to have to do a competency assignment because it's important for you to be on a certain level. All right. Trading rooms are free for everybody. It's there for everybody. So this is the kind of stuff that you want. This will help you develop your strategy. All right. But let's pause it there, guys. Let's pause it. I thought, let me start off nice and strong this morning. We'll deal and see where the charts are when we come back at midday. But it was really a good and insightful morning here. Absolutely. All right. Don't forget to like the stream, guys. Let the guys come in here. I think by now, just this one session, at least for the week, there's guys that need to be in here. So like the stream, let them come, let them get competent, and let them make money, man. All right. The market is here for everybody to make money. All right. It's really, really, but work on what you get given now. All right. Don't just want information. You got to start applying it. All right. Otherwise, you'll just be hoarding information. Have you guys watched all those documentaries on hoarders? The trading space has become a hoarding lounge. Everybody hoards information. We got to clean it up. Clean it up. Otherwise, you're just hoarding info. How do you clean it up? You got to practice. All right. So we shouldn't be hoarders in this industry. We should take the information, apply it, and then move. All right. I'll see you guys soon. I'll see you guys at midday. Yeah. What a great one. Ashley Reeve here, guys. I'm signing out. Ciao, ciao.